Why Wall Street is feeling so bullish, from the New York Times.
I'm Andrew Ross Sorkin, reporting from the Aspen Economic Strategy Group meeting where global policy leaders and economists have gathered for a two-day summit.
In the room are former Federal Reserve Chair Jay Powell, former Treasury Secretaries Hank Paulson, Tim Geithner, and Janet Yellen, and Minneapolis Fed President Neil Kashkari, who recently dissented against Kevin Warsh. The agenda covers the trajectory of Fed policy, tensions around the Strait of Hormuz, whether the artificial intelligence boom is veering into bubble territory, and the growing national debt. Meanwhile, S&P 500 futures are edging higher on Tuesday, nudging toward another record high. That climb comes despite a fragile U.S.-Iran ceasefire that is whipsawing oil markets, rising odds of a Federal Reserve interest rate increase, and President Trump's renewed trade war. The primary engine behind the optimism is corporate earnings. As of Friday's close, 86% of S&P 500 companies that have reported this season have beaten analysts' earnings per share forecasts, according to FactSet. Shares of Palantir, Snap and ON Semiconductor surged in pre-market trading after each posted impressive results on Monday. Robust consumer and business spending, together with companies' pricing power, have padded bottom lines. Palantir's chief executive Alex Karp described the sales growth as otherworldly, prompting the firm to raise its full-year outlook. Later today, SpaceX will deliver its first quarterly results after the closing bell. Jeff Buckbinder, chief equity strategist at LPL Financial, told investors that earnings will be the primary driver of stock gains this year. LPL has not lifted its year-end S&P 500 target, but analysts at Goldman Sachs, JP Morgan Chase, and Citigroup have. Concerns about massive spending on artificial intelligence are not dampening the mood. Hyperscalers have rallied in recent days, with Amazon surpassing $3 trillion in market value. Meta shares are on a three-day run, snapping their worst-ever losing streak even as heavy capital expenditures weigh on the stock. Helping the breadth of the rally, the equal-weighted S&P 500, a broader measure of the benchmark, has also hit a record high. Still, risks remain. Volatile oil prices could batter both stocks and bonds. The yield on the 10-year U.S. Treasury note traded at 4.694% on Tuesday, up from earlier levels. That's the snapshot for now. Thanks for listening, and we'll be back with more from Aspen tomorrow.